Okay, let me unmute us. Do you want me to tell you my favorite thing about that countdown?
Yes.
The music was from P90X.
No way. Wait, did you make that countdown?
Yes,
I was
yes, I
like, I
did.
was getting amped up. I felt like I was at like a growth day conference and that Brandon Bouchard was going to come out. I wasn't sure if it was
Mhm.
yours or if it was StreamYard's, but that was amazing. I feel
Um,
hyped.
it it was mine because so I taught Beachbody life classes, right? And during the pandemic, they gave us all kinds of virtual playlists that were not copyrighted.
Oh my God, of course.
So I went ahead and used that for this.
Yay. Wow. I'm amped now.
Oh, okay. If you could do one sentence to encapsulate your thought about the call yesterday, what would you say?
Same old, more of the same, boring, disappointing.
Mine was like, "What the hell?" Like, and I think welcome and thank you everyone who's rating from DC. Um, that's awesome. The Bad News Bears. We are the Bad News Bears. I mean, okay, so I was driving home. I had to go anyway, it's a long story. But I was driving in the middle of nowhere and the amount of yelling that I was doing was ridiculous because I
Yeah.
was like, "One question? One
I know you
question?"
sent me an Instagram voice note and it was like driving one question.
What? I was
Yeah,
so
that
mad.
that was a bad sign to me.
Mhm.
So,
So I couldn't see I don't know how you logged in. Did you see who was logged in? Could you see who was logged in?
no, for just I don't know how the platforms work that they host the conference calls on, but you as a normal investor, you can't see anything. You're just there basically watching a Zoom presentation. And they always say like, "Oh, you can now dial *1 and ask a question," but the same four analysts from the same four firms always ask the questions. So it's all
Mhm.
already set. It's not like I could go on there and like speak to Carl. That's not how it works. So
Yeah. Interesting. Yeah, it's pretty wild. And for those okay, those in the chat, have any of you did any of you guys listen to the call and get like a preview? That would be the first question. Um, or are you going into it blind?
mm,
Because I yikes. Yikes, yikes, yikes.
yeah.
Um, okay, popcorn ready. All right. So, and I do have a couple of different things to I have actually I'm just going to pull one article that compiled a lot of the information that I had from the different things that I had. Let's just look really quickly. People at the beginning were doing great. The stock is at 0.179 right now. So didn't react well yesterday to
No, it did not.
yesterday. Okay. All right. You guys are waiting for this. You're ready for chaos. All right. Let me pull up the call. It's a pretty boring screen, you guys. Sorry. They just really it's just like this is it. This is it.
It's that
So,
screen every time too. So,
yep, that's it. I wonder if I can play it without maybe we can play it without listening to it so you guys can just watch us. Let me see. No, dang it, it's not gonna let me do it. All right, that's fine. So, I did fast forward it just a little bit so that we didn't have to listen to the safe harbor language, you guys, because I mean, it just is kind of boring. So I have fast forwarded it just to this part. So we're gonna start with Mark Goldston. So we're gonna listen to some stuff from Mark, and then I'm gonna pull up some information that I put together on Mark Goldston. And I will say the sound isn't fantastic. I don't know why when they're presenting, they don't do a better job, like, with their audio. So the audio on their hand doesn't sound great. So, just wanna get that out. That's just the call.
Is it playing right now? I can't hear it.
Can you guys not hear it? Hold on.
I know you can hear it. I saw you laugh.
Can anyone else let's see. Hi. Okay, those that are in the comment section, could you guys hear it? Cannot hear. Let me see, if you guys can hear this now.
I want to make 3 key points.
Can you hear it now? Can you hear it?
Yeah, I can hear it.
Now, I'm gonna have to just change something real quick. And let me see if this is gonna let me hear it. It's so annoying. It's trying to connect. Okay. Let's start. I hear blink blonk.
For investors and analysts to gain a perspective.
Okay, Aaron, when you want me to stop it, like give me a sign.
Okay.
Where we're going. First, as you know, we intend to execute a reverse stock split later this month. This should get this stock into a range that will attract institutional investors.
All right, stop that. So that's the first confirmation that they've given that they're going to do a reverse stock split. So that means at the annual shareholder meeting, which is I think 2 weeks from now, they will enact a reverse stock split.
Wait, hold on. Sorry.
No, you're good.
Okay.
The reverse stock split is confirmed because Carl is a majority stakeholder, so he will vote all his shares yes, and that will keep the stock from being delisted. The only problem is that when you have a reverse stock split, typically the stock price drops from anywhere between 10 to 40 or 50%, depending on the ratio of the split. So that is pretty much a guarantee coming up in a couple weeks that's going to happen. So Mark just confirmed that for us.
So do they just have you like you just hold it and then are like so when the reverse split happens, if you invested, would it be best for you to just sell?
I mean, it's weird to get 100% confirmation that a reverse split is going to happen. Typically, it's not announced beforehand. Like that's kind of unusual. But I think in this case, because the stock has performed so poorly, because it has no chance of getting back over $1, and because Carl is the majority owner, I think that they have no issue coming out and publicly like proclaiming that. Whereas most other companies probably would wait and keep it a secret until it happened, because why would you possibly ruin the chance of maybe having some good news or the stock going up and recovering? For me, I got completely out yesterday. So I liquidated my full position after I saw the earnings report and confirmation of the stock split happening. I just didn't want to risk it, and I didn't want to be like beholden to it and have like a chain around my ankle. So I got out. Holding through a reverse split is risky. Mark's point that it could attract institutional dollars, which would be like big Wall Street dollars. Yeah, it's more likely because a lot of big funds have price minimums for stocks they can invest in. So like a lot of big firms can't buy penny stocks because they're higher risk. So if you bring the price up to $5 or $10 now, yes, you could attract some institutional investors. But I just don't see who would buy into this, given like you could buy into Peloton, you could buy into, a Planet Fitness, Lifetime Fitness. So I just don't see it actually happening. I think it's all a smoke and mirrors dream. So
yeah, I was kind of surprised by that. I was like, imagine who would buy into it based on their financials and their outlook. And
Yeah. I mean, they'll get somebody probably eventually to buy some shares, but in terms of it being enough to like turn things around or there being a lot of interest from Wall Street, I just don't see it. I don't see the company lasting, especially given this. I thought this would be a really pivotal quarter, and I think that this quarter was more confirmation that the company is like nearing its end. So
yeah. So someone asked, what happens if the stock goes to zero?
so the stock can't really go to zero. Going to zero would be the stock getting delisted, which would mean that the stock wouldn't exist. Um, Technically, the shares that exist would always be worth something if they were on the exchange, even if it was 0.00001. But um, if the stock goes to zero, which one day if the company was going to go bankrupt, it could, and it got delisted, basically you could try to sell for a 99% loss guaranteed, or you just wait it out and see, like if they went bankrupt, for example. You could see what you get divvied up from assets, but shareholders are typically very low on the list of who gets what when a company goes bankrupt.
Okay. And could they take the company private again?
Yes. So at any time, a company that is public could go private. There's two ways to do that. Number one is they could voluntarily delist from the exchange. So either they could choose to like not be a public company anymore, or somebody could buy them. I think it's possible that in the future they voluntarily choose to remove themselves. Number one, because they're just performing so poorly and there's no upward trajectory in sight. The other thing is it's really expensive to be listed on an exchange because you have to have auditors, you have to file reports, you have to have people to do all that, you have to pay to be on the exchanges. So some companies that shrink this much will voluntarily remove themselves to save on cost. So I think that could happen. I don't know who would buy them out. Maybe a like private equity firm. A lot of people wanted like Peloton to buy them out, but Peloton also has its own financial issues that it's dealing with. So I don't see that happening. And then the other way that they could go private is if the stock exchange delisted them. Like again, if they do a reverse split and their stock goes to $10 and it goes all the way back down to below $1, which is very possible. At that point, either they'd have to do another reverse split or they would get delisted for failing to meet the listing requirements.
Okay. And just to answer one more question on here, and then we'll keep going. Do I think the Brendan Burchard situation will make people buy into it? I don't.
No.
Brendan has partnered with at least like 3 other companies. It's not like an exclusive thing.
Yeah.
And I mean, it's Brendan Burchard. It's
yeah, it's not like they're partnering with Peloton or who are like Kim Kardashian, like stuff like that. Like it's Brendan Burchard, and there are thousands of companies the size of his. There's thousands of people that are like in his arena that they could partner with, and really like this is what's so stupid about Beachbody and the management team. They're always like, and like this is how I view Mark Goldston too. It's like they're going to pluck some random average middle of the road performer from a field, bring them in, and then say that they're going to be the saving grace. They're this big game changer. And it's like, no, like there's tens of thousands of people and businesses they could pluck in and say, oh, this is our new partner for growth. It's all just about how you spin, how you market that. And that's what's really frustrating is that they've done this playbook so many times in the past with so many different people, and it's never worked. So when people always say, oh, like this is going to change it, or, oh, it's going to increase revenue, or, oh, it's going to increase subs. If you're telling that to yourself, you are probably a huge bag holder like me, and you're lying to try to feel better.
Okay. I do think we should start calling him just bruschetta. because that's what they call him on
Yes, Brendan
Reddit.
Bruschetta. I know, I love that.
Oh my gosh, it was cracking me up. So if I call him Bruschetta, I'm sorry. Okay, let's go back to Mark.
Dollars of costs. And Mark Sweden, our CFO, will talk about an additional $40 million that we've identified in cost savings. We expect to realize these additional savings in 2023, bringing the total to $165 million in aggregate annualized cost savings since 2021. And third, we have begun the implementation of the turnaround plan we architected after my arrival in June of 2023. As part of that plan, we'll be aggressively pursuing ways to win back some of the 14 million people in our extremely valuable CRM base who are either.
Okay, can we talk about this real quick? Okay, one is, have you seen the offers at all that are going out?
No, I've heard like mumblings, and then people also asking like, "Is this actually happening already?" But I have not seen anything. I've not seen an email screenshot or anything.
Okay, so here's an email screenshot that I got. It's to help get the word out. We're testing special offers to some former customers for their first year. You were selected to receive a 1-year BODi membership for $39 instead of $179.
Oh,
So is it going to be possible that they will get people to sign up? Absolutely.
mm-hmm.
But it's not a long-term strategy.
No,
Because
it's a cash grab.
it's totally a cash grab. Because at that 1-year point, they're all going to cancel.
Yeah.
And I think they may get people that want to try like Shanti's new program.
Yeah.
But other than that, I don't think so.
No.
I don't see this being a good idea. Plus, it's going to former coaches.
Yeah, that's
They're
the big
not
kicker
running.
for me is like it's not
Yeah.
going to a database of like a lot of ex-happy customers. It's going to there's a very mixed bag of what you're getting in that 14 million people.
Jenny's still waiting. Jenny, me too. They haven't sent me anything. I'm kind of upset.
Yeah, Carl, can I get a free membership for my $120,000 that I paid you?
You should get a lifetime.
I should get a lifetime.
Shanti, break free. I agree.
Their former subscribers or qualified leads that were added to our database since 2016. In addition,
Okay, think about how quickly the market changes. You added him in 2016 and you're now hitting him? 7 years? What? Like, I don't understand. Oh, Aaron deserves a lifetime of Shakeology.
Oh
Don't
my
do it,
God.
Aaron.
No.
Don't do it.
we fortified the product offering for our direct sales organization with the addition of Growth Day. This was developed by the dynamic, world-renowned Brendan Burchard, and we're aggressively pursuing outside partnerships and additional direct-to-consumer channels to help diversify our beta and create additional revenue streams from those untapped channels. Last quarter, I told investors that our main focus is on the generation of cash in the near to midterm, and we're developing programs designed to deliver on that goal. As a result of the $165 million in expected cost savings, along with the key elements of the turnaround plan I just spoke about, we believe there's a clear path to becoming cash flow positive, which would indeed be a milestone for the turnaround effort at BODi. BODi possesses invaluable assets, including what we believe to be the world's most extensive digital fitness library, a valuable range of nutritional products, a massive database of current and past customers, and importantly, a highly skilled leadership team. Last quarter, we developed a plan that prioritized profitable revenue over growth at all costs and a drastically reduced time frame for return on invested capital. If you look at the P&L of the company, you can see that scale is really not our primary concern. We believe we've got the girth and the scale to be.
Oh.
All right, I just had to laugh real quick. I might be like a junior high kid. I'm just saying. Like his word choices during all of this, like someone just said the word invaluable during a financial call. Like, yeah, girth. Everyone. Like, please don't, Mark.
Whew.
Profitable in the revised cost structure that we've created, and the potential for generating operating leverage during the course of 2024 exists largely as a result of those major cost savings initiatives. I've now been here for 5 months, and I am more convinced than ever that we've got the products, the team, the total adjustable market size, or TAM, and the turnaround plan to return BODi to its position as a dominant, highly profitable company, but one that is architected in a much more efficient manner. As I stated on last quarter's earnings call, turnarounds are not linear, and there will definitely be some bumps in the road.
Mm-hmm.
But our turnaround plan has been meticulously crafted, and we're making good progress. In the coming months, you should expect to see additional positive and purposeful changes taking place in the company. Our products are world-class, and I believe this because I'm a fitness enthusiast, and I've got significant experience in this athletic space with leading companies like Reebok, LA Gear, Converse, and Athletic Propulsion Labs, or APL.
Okay. When he mentioned LA Gear, I was like, I think I remember really wanting LA Gear, like in the 80s, maybe 90s. Like, where are they now? Where's LA Gear now? So I wanted to do some checking. And let me add. Now, this is kind of an old article because I wanted to see some information about Mark. Let me find. No, wrong screen. Where is this? Oh, here. I forgot that it's called 3-Time Loser.
Yes. Great article.
This is a great article from Forbes. And this article is all talking about Mark and what he has done or not done. And this was around net zero. So he took net zero live. And I mean, how did net zero do? Have you read the article in Vanity Fair?
I might, if it was in like the top Google results, I might have.
It was pretty funny. They were talking about he and his wife sold, they showed up to the stock exchange and she's wearing a cocktail dress and they're drinking sparkling wine, waiting for net zero to go live. And it went live and it was like, it came in at like $29 and then $28. And like, it just started going down and his attitude got progressively quieter throughout the IPO. And then at the end, he's like, I am so glad that we came in fairly low so that we don't have to explain why we exploded so high and then like normalized.
Mm.
And so like he was spinning it.
Spin
like
doctor.
He's great. Oh, hey. Oh, are we getting a raid? We're getting a raid from DC. Thank you. Okay. So 3-Time Loser. I think the other interesting thing is Mark Goldston. He's like a self-proclaimed turnaround artist.
Yeah.
Right?
Yeah.
So he okay, let's just I'm gonna kind of highlight. Oh, hold on, I don't need the okay, we're gonna read right here. So Goldston, who joined the company in April, has been president and chief operating officer of LA Gear, senior vice president and chief marketing officer of Reebok International, president and CEO of Fabergé, and CEO of Einstein Brothers Bagels. He's known for coming up with marketing gimmicks that make headlines. At Reebok, he was responsible for the pump. I totally wanted those. Oh, look, I wear a Reebok shirt.
Oh my God.
Sorry, I couldn't help myself. At LA Gear, he introduced shoes with lights in the heel. And then it says, his performance as a corporate leader is less impressive. A self-styled turnaround artist who wrote a book titled The Turnaround Prescription, Goldston was brought into LA Gear in 1991 to rescue the struggling footwear maker. 3 years later, he resigned with a turnaround nowhere in sight. In fact, the company's share of the athletic shoe market fell from 10% to 5% during his tenure. LA Gear eventually filed for bankruptcy. Let's see. And then Einstein Brothers Bagels, which he didn't mention in this, and it's no wonder why. Goldston joined Einstein Brothers in 1996 and helped it grow into the nation's leading bagel retailer. Not even going to lie, I liked Einstein. They were pretty good. But a plan to convert it from a franchise operation to company-owned stores was badly received by investors. Einstein Brothers stock lost 82% of its value in 1997, and at the end of the year, the company announced Goldston's departure. Said one analyst at the time, Goldston was a startup guy. His role was done. Now they need to execute. Mark, this...
But don't forget, he wrote a book
But he
in
wrote
the
a book.
90s.
So did Brendan. Brendan has written a couple.
Oh, God.
So, I mean, I don't understand what Carl is doing. What do you think he's doing in all of this?
He's grasping for straws. I mean, it shouldn't surprise anybody if you actually, I mean, what did you do? Like a brief dive on Google? It should not surprise anybody that if you do a brief dive on any person or product or topic related to the company, that you will quickly see that there is no steel structure behind what you're looking at. And that's the way that Beachbody has always operated. I think they were lucky in the beginning to like create a program that had the right stuff, the right people at the right time to become as notable as it did. And then they rode that for however many years you want to argue. And then really since then, they haven't innovated. They haven't, created a new product that was revolutionary. They haven't created a new segment. Well, now, they have Health Esteem and healthy superfood dessert or whatever crap they're pushing. But it's the same strategy. So it shouldn't surprise anybody because it's what Carl has known for 20 years. It's what's familiar, what's comfortable to him, because he's always been able to do it without getting pushback because they were not public. So nobody ever had access to anything. And he never had to be in an arena where people would push him and where he had to be accountable to somebody. And that's what you've seen the last 3 years as they've been public is he's had to do that. And it hasn't gone well for him. And that's why he has disparaged investors. It's why he's disparaged coaches, partners, because the walls are caving in on him and he can't go to his usual strategies anymore because he's in the public arena.
Which is that's one of the reasons that it didn't make sense to me that he would go public because of the information that he has to share now.
And that's where I get into, I think Carl was not in it for the money. I think he was in it for the prospect of growing both the size of the company and growing, not his fame, but he loves to have influence. He loves to be an influencer. He loves the camera. He loves his Instagram stories. And he loves to hear himself talk. And I truly think, unlike a lot of people who go public and are doing it for money, I think his main motivation was internal, and it was that. And I think that's why he went public and was pushed by other people to go public for that quick cash grab for the initial investors, just like the initial partners that get into an MLM.
Yeah. Yeah. All right, let's keep going with Mark, and then we get to listen to Carl, blah, 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 for a little bit.
This is my wheelhouse. Now that we're in the process of focusing on improving the balance sheet and implementing strategies to expand our sales and marketing ecosystem, I firmly believe that we're on our way to driving more profitable revenues and, importantly, building cash. I'm focused on helping the team optimize our LTV to CAC to additional monetization opportunities that will drive cash to profitability. We have significant opportunities in front of us, and we're just getting started. You'll note that on our investor relations presentation on our website, we expect our selling and marketing costs as a percentage of revenue to decline 1,000 basis points to 45% during 2024. Just take a moment to reflect on this change. This 1,000.
Okay. But that one, and Carl's going to talk about it later, and so is Mark, I think. The reason that that is declining so much is because of the changes in the compensation plan to the coaches or the partner network. By doing that, they're losing partners. Since they announced that, they are bleeding partners. They're losing their unsophisticated volunteer sales force. And so that you also have to take that into account. I really wish that we could talk to the investors. I like, there's so many different parts of this that they spin, and it's like, wait, do they really understand this? Do they? And someone asked earlier about the MLM. I do think that the MLM gives a negative perspective to a lot of the investors.
Oh yeah, huge.
I mean, it's absolutely.
That's right. Anybody with credibility, any big player, one, wouldn't buy it because it has such a negative reputation. And two, I think it's why also it doesn't get a lot of coverage and it doesn't get a lot of analysts on it because like everybody at this point in society knows what it is. It's not like a secret or anything. It's out there in the public. So
yeah, I agree.
Basis point reduction should result in an additional 10% of revenue flowing through to the bottom line in 2024. That's a game changer, and it's going to be critical in helping us to be cash flow positive in the future. I'd now like to turn the mic over to Carl, who will give you more insight into the company's transformation. Carl?
Thank you so much, Mark. And let me start by saying how great it is to work with Mark as executive chairman and have the benefit of his experience turning around public companies and strategizing how we can unlock the value we've created over the last 25 years, which maybe we've taken the underlying value of the business for granted a little bit. And it's such a great partnership to work with Mark. Okay, so let's talk about the third quarter. First, a high-level overview of results and operational highlights. Then Mark Sweden, our Chief Financial Officer, will give additional detail on Q3 financial results and guidance for Q4. We've made significant progress implementing our turnaround plan this quarter, where our primary focus is on cash flow generation and creating new incremental revenue opportunities. Q3 revenues and adjusted EBITDA were within our guidance range. And while our overall digital subscriber count decreased by 10% sequentially to 1.38 million in Q3, as we mentioned last quarter, the more meaningful metric is our premium digital subscription, BODi, spelled B-O-D-I, which grew by 27% in Q3 over.
Okay, but it's because you forced people into it.
Yeah, it's complete spin because the old subscription doesn't exist. It's going away. So you're touting this conversion number, but it's a forced conversion. So anything other than 100% is bad.
Exactly. Well, and again, he's going back to this, like, okay, don't pay attention to the number from this quarter. Look at this 60% that we had told you about last quarter. And it's like, no, I want to know this quarter, what was the percentages?
Yeah.
And so again, it's this spin.
It's frustrating from an investor standpoint, for sure.
Oh, absolutely.
Q2 to exceed 900,000 subscribers at the end of Q3. And you've no doubt heard of the emergence of GLP-1 weight loss drugs, which have generated a considerable amount of attention and even questions to their effect on demand for services like ours. We're actually encouraged about treatments that can help some of the 74% of Americans that are overweight or obese.
Wait, I didn't think they were worried about weight loss anymore. I thought this was how health esteem. I wonder how he's going to react. So did you know that today
Yeah, I
they
saw that.
approved Wegovy?
Yep.
Okay. So they or not Wegovy, Mounjaro or
Yeah,
whatever.
the other one.
Say. Yeah, the other one. That has been approved now from the FDA for weight loss. And it's interesting. I think this is a good example of where Carl is completely missing it. So for example, like Noom, Optavia, which is another MLM, they have partnered with the weight loss drug companies and have kind of implemented it and put it into their program. And I think now he's going to be like, oh, well, we're going to partner with people and help them. But he's been bashing people for the last like year that
Bashing
are
hard.
hard. He's been going for him hard. So how's he going to do this?
Yeah, I don't know what the strategic conversation was to completely go away. Not only just not talk about, but to talk down weight loss and improving physical appearance. Because yes, well, we are more cognizant, and I work full time. I'm at work right now in a gym. And while we're more cognizant than ever in the industry that not everybody is working out to get a six-pack ab or to lose weight, there is a huge chunk of the population that exercises and diets and does healthy lifestyle stuff and buys products to do those two things. To say you're going to completely move away from it doesn't make sense with the market. And when it's been your bread and butter for 10 to 15 years for your business, that also doesn't make any sense. So it really is. I feel like this was like something consultants told them to do, and they just went with it. Yeah.
And their coaches or partners didn't go with it. I mean,
No.
they're all still talking weight loss. And so you're getting these conflicting messages from Carl and the company versus everyone that you're listening to. And yeah, Optavia did a total 180 on the drugs. And so it'll be interesting to see if Carl does that with the weight loss drugs as well. I can't wait because I've got some speeches from Carl on weight loss drugs. I hope he does a flip because that'd be amazing.
But we also recognize that a chemical solution is only a single step towards sustaining a healthy lifestyle and does nothing to improve skeletal muscle mass, which is critical to health. And
okay, I want to talk about skeletal muscle mass for a minute. Is he trying to imply that his programs do that? Because some of these coaches have been lifting 5-pound weights for like 15 years.
Yeah.
I mean,
That's one of people's biggest frustrations with the product line is the failure to launch something like P90X or Insanity where you can really, as Shanti's now saying, dig deeper and build significant muscle mass. They completely, and that, with COVID, the pandemic, with a lot of people moving into the fitness industry and starting fitness for the first time, gyms have record numbers since the pandemic started to be in the rearview mirror. Like we still have record numbers right now, and all of that, none of it is towards the cardio calorie burn space. It's all weightlifting. So they completely missed a very basic, huge market potential, which maybe now they're seeing, which is why they're throwing Shanti in the mix. But they're years behind in terms of catching up. So,
well, and it's interesting because they're bringing Shanti's program in, but they're pairing it with Autumn's nutrition.
I can't even hear her name.
Right. So it was interesting to me. So I lost the majority of my weight and got incredible results with Chalene Extreme. I was lifting heavy, low rep, and then adding in some cardio every now and then.
Yes.
Right. So I got amazing results. And then I was convinced to become a coach and I started doing 21-day fix and doing like 5-pound weights. And I lost the gains that I had made in strength. And even so, I'm doing a new strength training program that actually Jen's in here. She created a program for me. And I'm back to tracking the weights, doing boring, like deadlifts, not like a deadlift to a bicep curl
Yes.
to a whatever,
Basic deadlift.
basic deadlift. And I'm tracking my progress and I'm seeing progress again,
Yes.
finally. But it's like they're missing that.
Yeah, it's really weird because it's so basic. They're missing the fundamentals of fitness. And I
Mhm.
feel like they've gotten so twist and turned in the direction they're going, the narrative they're spinning, what they want to sell, that they have missed that. They're
Mhm.
lost. And I think all of the subscribers and the partners are lost too, and why so many people have left, because
Yeah.
people don't like the super blocks. They don't like the emphasis on cardio, and people want a combo, or they want a weight lift because that's how you get results.
Which is one of the reasons I think that they always go back to promoting like P90X and Insanity. And I'm like, dude, that was 25 years ago.
Yep.
So what have you done since?
Yep.
All right.
Autumn. They've done autumn.
They've done
Functioning in the
autumn.
world, it's
Way
really
too much.
vital that people supplement these weight loss drugs with healthier lifestyle choices, including fitness and nutrition. That's where we come in. BODi's approach to health esteem helps people feel good as they create sustainable, healthy habits. Honestly, the significant investment people can make in a pharmaceutical solution is wasted without lifestyle change. And we have the lifestyle solutions for GLP-1 users, including a broad array of structured, step-by-step fitness and nutrition programs, plus personal development and mindset tools. As a result, we don't see GLP-1 treatments as a headwind for us, but rather a very significant tailwind, as it brings the importance of reducing obesity to the forefront and makes lifestyle change an important component of that decision. That's just another reason that we're excited about how our position in the market puts us in a unique position to capitalize on these long-term industry tailwinds. And our turnaround plan aligns with responding to these tailwinds. When we started this turnaround, there were three key pillars to our transformation. First, we had to massively re-architect our cost structure. By end of 2023, we expect to realize $165 million in annual cost savings. And we continue to carefully scrutinize capital allocation to make the company as cost efficient as possible. Second, we initiated a reinvention and simplification of our digital platform, which was completed earlier this year. Since the introduction of our premium digital platform, subscribers continue to renew from the former Beachbody On Demand subscription to the new BODi subscription at a 60% rate, which exceeds.
Okay, but that 60% rate, that was what he quoted in Q2 as well. How did that change in Q3? Because I would be shocked based on the numbers and just basic math if it's still exactly the same. So why isn't he using updated numbers on that? Am I wrong on that?
No, we don't have any insight to that number. There's no details provided in that. There's no breakdown in terms of subscriptions of who's what, where is what, all that kind. When do people change over, all that kind of stuff. We only have the percent that they give, so it's possible. It seems weird to me. The only thing I can think of is that I know if you just scroll Twitter for a minute, you'll see lots of people complaining about the ability to cancel or being charged and thinking they had canceled. So that could certainly be a heavy element here, but for that to be consistent, it seems weird to me.
He's also not mentioning the fact that people hated it, which is why they're now doing this $99 offer, but they paired it with Shakeology.
Yes.
So that people could do like a 1 month thing because people were pissed off.
Yeah.
Like it just,
yes.
Whatever, Carl.
Our original expectations. Third, we need to restructure sales and marketing with a focus on delivering higher cash generating revenues and lowering customer acquisition costs. So let's use this call to detail our progress on that third pillar. Overall, there are 5 key initiatives that we're executing against, which we believe will drive new memberships and generate profitable revenues. First, Partner network activation. Restoring momentum to our coach and partner network is a central initiative to our turnaround plan, as our partner network is our largest and most effective go-to-market strategy. The initiative we call the BODi Growth Game Plan is designed to help partners improve the overall productivity of their teams, as they help current and potential customers achieve an improvement in their health esteem. Health esteem is the category of the industry which shifts the focus.
There is no category in the industry of health esteem. That's you, Carl.
Superfood dessert.
Okay, and let's talk a little bit about activating the partner market. Dude, you just pissed them all off.
You could put a knife into their chest and then gave them Brendan bruschetta as the Band-Aid. That's what happened this quarter.
Well, and here's my other issue with this whole Brandon bruschetta. That's what we're going to call him from now on for those that just joined. Bruschetta doing this Growth Day app. The people who will be paying for this are the coaches who just had their compensation decreased.
Yeah.
And the amount, it's so frustrating to me coming from that environment. The pressure that you feel to purchase everything that they have to, enroll in Growth Day, like you have to do it.
Yeah.
And so they are forcing these coaches to just bleed money. And it makes me so mad. And then they, cut their compensation and stuff. Oh yeah, Katie, we're going to get to the bike because they've got some stuff about the bike coming up. Oh, the bike.
From a results at all cost mentality to that of feeling good at every step of the process to achieving an extraordinary lifestyle transformation. And that includes adding positive mindset and high performance habits to the equation. To that end, we're excited by the appointment of New York Times best-selling author and motivational speaker, Brendan Burchard, to the role of Chief Growth and Performance Advisor. Brendan's famous for being one of the world's leading high-performance coaches, and he's assisting the company's partner network in achieving optimal performance so more people unlock the potential of this supplemental income opportunity for themselves.
So I think it's interesting to me that they have gone away. So from my understanding, Petra Kolber is no longer with the company.
I thought so.
There were some emails that went out that Petra's gone. So they're just now introducing this positive mindset thing. Wait, you did that last year. Does he remember any of that? But in my opinion, they didn't like Petra, who was actually talking about personal growth and like being a better person. They want Bruschetta in here who is like, sell, and Energizer Bunny. They didn't want that. They didn't want what Petra had because it didn't impact their bottom line.
That's the vibe. I've been stalking her Instagram because I was like, okay, I haven't heard her name in 6 months. What's going on? And, there's from her, there was not a peep, no branding, no anything. So, yeah. And now you have Brendan, who is like off of like a car sales lot versus she's more like, oh, I'm sitting down with my therapist and I'm going to talk about my intentions. Mm-hmm. So yeah, very Beachbody.
She's gone. Just quietly went off into the sun. Oh, wait, did they say they're sunsetting?
Oh, yes. Love that term.
Yeah. She was sunsetted.
Our relationship with Brendan is built around a revenue sharing partnership to incorporate Brendan's Growth Day app into our product offering. That's an additional new revenue opportunity for the company and our partners, and that kicks off in just a few days on November 9th. In addition, we recently announced that early next year, we are implementing new results-oriented compensation incentives for our partners, which will reward high performance, especially for new partners, while aligning the overall compensation structure with generating profitable revenue. Second, customer database reactivation. We've begun aggressively mining our customer database of over 14 million prospect email addresses. We started testing our broader database mining campaign in August, with special offers. And while it's still early in the
And like I said, that $39 instead of the $179, sure, that's great for right now, but that is not a long-term growth strategy.
No.
It just
It's to
isn't.
try to fix the balance sheet in the coming quarters.
Yeah. Oh, absolutely. Absolutely. Wouldn't body tanking make bruschetta look bad? I don't think so, because his he's going to have a lot of growth. So he is going to be showing these huge growth numbers for his company.
Yeah.
And he's not even going to talk about BODi because he's also partnered with so many other companies. It's not a new, like, it's not.
He has nothing to lose.
Nope. He
He's
does
not
not.
an investor. We don't even know if he gets a salary. We don't know if he's actually an employee or just contracted.
Yeah.
And we didn't even know for certain. I didn't know for sure until yesterday that there was even a revenue sharing arrangement. There had never been language on that. And we had been discussing it in stock forums, like, coaches will get a commission, but is Beachbody itself getting revenue? We didn't even know because they didn't release anything of detail.
Nope. And what is the revenue sharing portion?
We don't
they have a
know.
revenue? I don't think they have one.
That's what I had argued with someone. I was like, they did not say anything. I was like, what is Beachbody itself other than band-aiding the cut of coach compensation and growing their platform with another like flat offering? What is Beachbody getting from it? And people were like, oh, like they're going to get cash. They're going to get revenue. And I was like, I've not heard that yet. So they said that on the call yesterday, but I have not seen it anywhere else. And I've never seen any type of document that had details about it. So
Yeah, I know the coaches, if someone signs up for the $29 per month, their compensation is like $7, I think, is their commission portion of that. So that, I
big
mean,
money.
I wouldn't assume that it would be a huge amount to Beachbody if, like, that's already.
It would be less. It would be significantly less than whatever the commission is, for sure.
Yep.
So it's not a
Absolutely.
significant revenue stream for the company.
No, absolutely not.
the process, the opportunity to activate this massive database with minimal reactivation costs can have significant upside. We'll continue to refine and expand this initiative and update you on our progress in the upcoming quarters. Third, performance marketing. We've been deploying more efficient direct marketing tactics that are producing stronger results. For instance, we've optimized our media placement, resulting in a 25% increase in our conversion ratio in Q3 over Q2, bringing us to 2.5%, which is the industry norm. Also, this quarter, we launched affiliate distribution with Rakuten and Cartera, offering consumers new opportunities to earn rewards when they shop with us. And we launched a Refer a Friend pilot, enabling us to give incentives to those that refer friends to subscribe to BODi. Fourth, our free preview tier. Last quarter, we announced our plan to introduce a new free preview tier to give prospects better visibility to the superior experience of structured programs, which leads the user to a step-by-step process to get real, healthy results. This tier will let people try over 120 samples of our structured fitness programs and nutrition plans. Plus,
that doesn't seem like a huge thing to me.
No, and they've done a freemium tier before in their history, and they've done these things before, so they're not new. They just haven't been doing
they've
them.
all done their sample workouts. Like,
Yeah.
That's nothing new. Yeah, no. Yeah, all the sample workouts are on Vimeo. They absolutely are. That's where I've done them.
our personal development content, and see the real distinction of our approach to lifestyle transformation. That content has been locked behind the paywall until now, which you can imagine has been an impediment to converting new prospects into subscribers. The launch of BODi Previews is scheduled for mid-November. And let me elaborate on how significant this opportunity is. Like I said, currently, we're converting 2.5% of our visitors into paying subscribers, which is an industry standard. But with our popular content like P90X, Insanity, 21 Day Fix, and over 120 programs, we believe the free preview model, including a version which will attract traffic on YouTube, gives us an opportunity to showcase our most powerful asset, our structured content and introduce more people to our proven approach. We believe this new tier will drive a higher conversion rate of visitors to paying subscribers while attracting even more prospects to our platform. And fifth, Amazon. We're excited to expand our presence on Amazon. Although BODi products have been previously sold on Amazon, we've never treated the platform as a real sales channel for us. And by partnering with one of the largest Amazon resellers, we'll broaden our nutrition and fitness offerings, and we expect to capture the latent demand of significant search volume for our brands on Amazon, as well as optimizing our product listings on the platform. This is just...
Here's the thing though, the second you go onto Amazon and let's say you search Shakeology, you're also going to get all of the alternatives that are comparable that are like a third of the price.
Yep. Way cheaper. These products are expensive for the market.
Way too expensive for the market.
And you're pissing off all of the coaches.
Mm-hmm.
Like what? It's literally, there's so many self-inflicted wounds to the company because they keep inflicting pain on the coaches and then they're leaving.
Mm-hmm.
And you're just bleeding.
Yep, absolutely. It's been so interesting to watch the last even like 2 or 3 weeks, the people that have been bailing and the different ones they've been going to, they're all going to other MLMs.
Mm-hmm.
But the interesting thing is when you see a coach leave, what you don't see is their entire team that goes with them.
Yes.
Because it's similar to a job right now where most people do not have loyalty to a company, they have loyalty to a person.
Yeah.
So they signed up with that coach, and if that coach leaves, they leave. I don't understand him at all.
Getting started as we go into the fourth quarter. So we'll provide updates on future earnings calls. All this is to demonstrate that we are laser focused on generating profitable revenue.
Laser focused.
Visibility of our 25 years of content to this massive TAM, which has maybe only heard of P90X. As proud as we are of being one of the few health and fitness companies to achieve this kind of critical mass over our 25 years, I'm actually more enthusiastic about our potential over the next 25 years with all these new initiatives. But for now,
Screw off.
I'll call over to Mark to walk through the specifics of our third quarter financials. Mark?
Thank you.
Okay, so we'll listen to the financials. If there's anything you want to point out during the financials, let me know. There were a couple things that I caught, but they're all pretty basic. But if there's anything that you can help us, like, okay, this is what this actually means.
Yeah.
Carl and Mark, and good afternoon, everybody. I am pleased to announce that in the third quarter, we met our guidance on revenue, adjusted EBITDA, and cash use in operations. This is the 8th consecutive.
Okay, wait, so I have a question.
Yes.
So just saying that they met their guidance, that doesn't necessarily mean it's a good thing if their guidance sucked, right?
Yes. And that's a strategy that they've employed for the last 8 quarters, which is 2 years of time. Each quarter they've lowered their guidance, and then they've met the guidance because each quarter it was lowered. So meeting the guidance is actually, it's not a positive thing. It's a bare minimum type thing, where if they didn't meet the guidance, then it would be really bad because the guidance is already low expectations.
Okay, that's what I was thinking.
This quarter that we have achieved or exceeded our guidance. I will now discuss our results for the third quarter along with our KPIs and then provide guidance for the fourth quarter. Revenues were $128.3 million, which was above the midpoint of guidance and 5% below the prior quarter. The year-over-year decline in quarterly revenue was 23%, down from 25% in Q2 and 27% in Q1.
So are they saying like we suck less? Like we sucked 27% and then 25%. Now we're only sucking at 23?
Yes.
Okay.
Which actually is, if you think about it, it's actually sucking more because that percentage is on less and less revenue. So
Okay.
if you spin it that way, it's actually bad.
Okay. Awesome.
Q3 sequential revenue change reflects the normal seasonal decline in the fitness industry. I will elaborate on each of our 3 product lines, and given all the changes in the past year, I will focus my comments on sequential revenue performance. Digital revenue was $64.3 million, down 1% from $65.2 million in Q2. Our overall digital subscriber count is 1.4 million, down 10% from 1.5 million in the second quarter.
Okay, wait, but I thought they were talking about their incredible conversion rate.
Well, that's why if you think about it, 60% is not good, because that 10% drop is coming from that 40% that they're not converting.
All right.
Given the $179 annual price of the BODi subscription, the ARPU is now higher, and our stable quarter-over-quarter digital revenue is also supported by a partner count, which remained flat over Q2. A reminder that we have tens of thousands of partners selling our product.
Okay. And I mentioned this to you yesterday. When I was in Beachbody, they talked about having 400,000 coaches. And now he's saying tens of thousands. I am so curious on how many coaches they have, but they won't tell you. They won't tell you.
I mean, if they're using that language in a financial call, that means it's less than 100K for sure.
Oh yeah. It's got to be so low. And it's, it's dipping daily would be my guess.
Yes.
Yeah, Jen's like tens of thousands? That's wild. It's absolutely wild to think that they were at like 400,000.
Yeah.
And their volunteers they're leaving. They're leaving.
Nutrition revenue was $59 million, down 9% from $64.6 million in the prior quarter.
Okay, wait. So they're also losing nutrition subscriptions, right?
Yes. They're bleeding nutrition subscriptions, which for me, if I'm looking at if I want digital versus nutrition to have less bleed, I want it to be the nutrition, because if they have the nutrition, they're already doing the digital, and that nutrition subscription is really key. I mean, it's expensive, so it is a high revenue mark. There's a really good margin on it. And for investors, that's where a lot of the potential comes from, is the nutrition.
Well, yeah. Especially if you pay a one-time $179 and then you go 12 months with nothing. But
Yeah,
if you're doing that technology,
it's like getting somebody into a baseball stadium, getting them into a seat with a cheap ticket, and then you want them to buy a bunch of beers at the game, because that's where you're making your profit. That's where the nutrition is really key for investors. And the scary thing about the nutrition revenue is this in Q3 last year, it was $90 million. And in this quarter, it was 59. That's a 30% drop in a year. That's really bad.
can I make a guess as to why it was so high last year?
Sure.
So last year at Summit, which was due during Q3, they introduced first thing and last thing at Summit, and they got all the coaches to buy it.
I see.
And then they didn't continue.
Big package. Yeah.
So I think Q3 last year was probably like really inflated because of that one thing, because that was ridiculously expensive. I think that's the thing that doesn't make sense. Why aren't they making some nutritional products that are more value, that aren't going to cost so much?
Yeah, they've never segmented the market. So they've never, like Peloton, for example, they offer different layers of product and service for different. So if you want to go budget, you can go budget. If you want to go all out and you want to be, you're rich and you want the elite top tier stuff, you can have that. And they're going to maximize their revenue and profit from each of those tiers. Beachbody's never done that. And they've also been really, really, I don't know if hesitant or actively resistant to introducing new products. Like the fact that they don't have a protein powder, to me, like just a basic protein powder, it's like, it's just mind blowing. What?
Like P90X had one. They used to sell one. And then the ladder supplements that they own,
So
not
interesting.
doing anything with.
No, and I don't know. Again, I see two things that could be possible. One is that the management team is just so frazzled and lost in their strategy that they just don't even think about like pulling it out, because it would take work to organize it and launch it and incorporate it. So that's possible, is that they're just that inept. The other possibility is cost, that, to launch a new product is really expensive. Even to take something they already own and incorporate it into the brand is expensive. And right now, like, they are not in a cash standpoint where they could risk doing something new that involves investing cash and have it not have that high ROI that Mark talked about. Because essentially then they would be broke.
Okay. Yeah,
So,
that's interesting.
yeah, it's weird.
They do have Recover,
Yes.
which, I mean, yeah, I guess that is a basic protein powder. I don't know. I'd have to look at it. I actually liked Recover in the way it tasted.
Nutrition subscriber file size is 177,000, down 10% from 196,000 in the prior quarter. In Q3, we launched a new monthly digital nutrition bundle called the $99 Rebel at a competitive introductory price. This bundle offers strong value, and we believe will resonate with consumers in this macro inflationary environment without sacrificing profitability.
Okay, I'm gonna disagree. $99 a month, you get 20 servings of Shakeology and then access to BODi. You can get really good fitness content for free on YouTube, and you can buy really good protein powders that are actual protein powders for less. So this $99 a month thing, that doesn't seem like a great deal to me.
No, it's not a great deal. It's not a good long-term plan. And again, it's all a short-term cash grab, because to fix the stock, they need to fix their cash flow. So I think that's why they introduced it.
Okay.
We believe this new bundle and the broadening of our sales distribution channel will stem the decline in nutrition. Connected fitness revenue was $4.9 million, down 3% from $5.1 million in Q2. We delivered 6,500 bikes versus 5,500 bikes in the prior quarter, an 18% increase.
You're right. You did an 18% increase because you did a fire sales on them all quarter.
Mm-hmm.
They sold them so cheap.
Yeah. Even I've looked at them, because it's like free for a bike.
Right? They're so cheap. Yeah. Okay.
We continue to see bike sales as a valuable lever to drive higher LTV across our subscriber base, as bike customers show more engagement and lower churn. The higher bike volume is driven by promotion. Moving to gross margin. We achieved a gross margin of 58.5% for the quarter, which decreased 460 basis points from the same period last year and 280 basis points below the prior quarter. Digital gross margin was 74.5% for the quarter, which is 320 basis points less than the same period last year. Compared to the prior quarter, digital gross margin decreased 50 basis points. The lower gross margin is due to sales deleverage. Nutrition gross margin was 54.7% for the quarter, which is a 50 basis points decrease from the same period last year. Compared to the prior quarter, nutrition gross margin decreased 320 basis points due to increasing cost of raw material and a product mix shift. Connected fitness gross margin was minus 105% for the quarter versus minus.
Okay, wait, what?
Yeah, so they're selling the bikes. The bike business essentially operates at a loss. And the reason for the fire sales, which the only way you're ever going to sell any of these bikes in the future, now that you've normalized this price and fire sale, is you have to sell them on a fire sale. And that fire sale has to keep getting more and more on fire. But the bike business operates at a loss because at this point, carrying that inventory and servicing the inventory is way more expensive than if they just get rid of the bikes at as close to break even as possible. They need them out the door. So that's why they're selling them. They want the cash. It's a cash grab for the short term, and they want to get rid of that inventory cost. So if you're in the market for an indoor cycle bike that is kind of crappy, but like might work for a while, it's a good deal.
I mean, you may lose the pedals, but that's okay. It's okay.
Minus 42% a year ago, and compared to the prior quarter, connected fitness gross margin declined 35 percentage points. The margin difference is driven by bike promotions and accounting charges for inventory reserve. We have significantly reduced our bike inventory and are launching a new offer in December out of our existing inventory. The new offer will appeal to price-conscious consumers. It won't have the large screen, but will connect to iPhones and Apple Watches. Our strategy continues to be focused on selling.
Okay, so their new strategy with the bike is to remove the screen and then sell it at an additional reduced price.
A fire sale.
A fire sale.
Like free.
So this would be like the dumpster that is on fire.
Yes.
They've thrown the fire into there. Okay. Yeah. No, Katie, it's not going to have a screen at all. It's going to connect to your iPhone or your Apple Watch. Wait, so do you have to be an Apple user? They just mentioned iPhone and Apple Watch.
I would assume not, but that might be since it's the prevailing market, he might have just used that terminology. But you never know. With Beachbody, it's possible that they completely missed the ball on that. So,
oh my gosh. Yeah, it is even worse. It's even worse. Okay. I mean, but at least the people won't have to like jailbreak, because right now they've been trying to jailbreak the fitness app to try and be able to use other things with this mixed bike, and they haven't been able to.
Yeah.
So, I mean, at least there is that.
And bikes to generate cash and attract long-term customers with higher lifetime value. Next, our operating expenses were $104 million, representing a $37 million reduction from the same period last year, which is a 26% improvement. Cost reduction is a key pillar in our transformation, and we continue to evaluate our cost structure on an ongoing basis. From a fixed cost standpoint, which includes our overhead expenses and capitalized expenditures, we took out $125 million in 2022 and are on track to take out an additional $40 million in 2023 for a total of $165 million.
Okay, wait, so you're taking on more debt, right? That's what he's saying?
No, he's talking about the cost reduction.
Oh, okay.
Of the business.
Okay.
Which is, I will give, if there's anything they've done successfully, it's cut costs. They've cut costs everywhere. Now they're doing it where they have to. The last point of resort, they fired a bunch of people. They've cut all their traditional marketing spend. They're not innovating with new products, and they're still not breaking even or operating cash flow positive, which I think is why they've had to turn to cutting the commission. I think that's probably been on the horizon for a while, but they're at the point now where they have to do it because there's no other arenas to cut cash from.
Okay. That makes sense.
As we have stated, our cost structure is primed for significant operating leverage. Now, let me walk through our three OpEx lines. Selling and marketing was 53.9% of revenue, compared to 56.1% in the prior year and 56.7% in the prior quarter. As Carl detailed, the third key pillar of our transformation is restructuring our selling and marketing. We recognize that selling and marketing, which is our biggest expense, is higher than industry norms. So we have launched a series of initiatives that we expect will reduce our selling and marketing expenses from approximately 55% of revenue to 45% during 2024.
Okay, and that is the coach compensation.
Yeah.
So they're not saying it drives me crazy. Again, it's this spin.
Yeah.
We're reducing our sales and marketing, but they're like, no, it's the MLM portion. We're paying them less.
Yeah.
But they can just put it under sales and marketing so that the coaches don't understand that that's what's going on.
Yeah. I mean, because technically from a balance sheet perspective, it is sales and marketing because they're a sales force. That's
Mhm.
what they are. And so if you're cutting commission from that, you're cutting the sales expense. It's interesting. He said that they will realize that over 2024 because I think it's because the partner discount is December 1st. It gets cut, right? And then January
Correct.
1st is when the commission changes.
Mhm.
So, I mean, it's going to happen effective immediately. And you're going to have that play out over the year, but you're also just going to hemorrhage coaches.
And when you hemorrhage the coaches, you're hemorrhaging your nutrition subscriptions
Yeah.
because they are the ones buying it.
Yeah. That's the thing. If you lose one person, you don't just lose the $179 a year. You lose, there's a lot of, when you have so few eggs in the basket now, if you lose one egg, you're losing a significant chunk of your revenue in your business.
Yeah.
Which is why they're at a really bad point where they're self-inflicting that carton of eggs. Like they're dropping it and they're causing cracks. Which is why, from an investor standpoint, when I saw this quarter, I said, this isn't good because they're performing really poorly. Not one metric is pointing to a successful turnaround, and they are self-inflicting, guaranteed further pain. And that's where you know that they're getting really desperate and they're in a really bad spot operationally.
Okay.
Explain the three main drivers of how we plan to get there. First, we announced on October 5 changes to our direct selling compensation plan. Second, for performance marketing, we are driving lower CAC initiatives like refer a friend, new affiliate models, and gifting. Third, our customer database reactivation strategy will drive new subscribers with minimal customer acquisition costs. We believe that these three drivers will lower our cash expenses for selling and marketing by approximately 1,000 basis points in 2024. On a hypothetical basis, this will represent $50 million of additional savings on $500 million of revenue. This is a new and additional benefit that drives cash flow starting in January. Moving on to other operating expenses. Enterprise technology and development was 14.7% of revenue, compared to 15.5% in the prior year and 13.8% in the prior quarter. We have maintained our spend as a percentage of revenue, but reduced the dollar spend by 27% from last year. We continue to streamline the technology and development costs while simultaneously improving our digital experience and enabling new functionality. G&A was 11.5% of revenue, compared to 11.8% in the prior year and 8.8% in the prior quarter. The dollar spend was down approximately 24% from last year. Our G&A increased as a percentage of revenue in Q3 over Q2 because of an increase in non-cash stock compensation charges. We continue to aggressively manage our G&A, looking for more cost savings. Net loss was $32.7 million, compared to a net loss of $33.9 million in the prior year, and a net loss of $25.7 million in the prior quarter. Adjusted EBITDA was
Oof.
Yeah.
So their net loss went up by they lost $7 million more than they did the previous quarter.
Yeah. Yeah.
Oh. Okay. Rosie's asking G&A.
What is G&A?
Mhm.
It's selling, general and administrative. Basically, it is the random basket of random things that it's not salary, it's not marketing. It's kind of the expenses to run a business, the expenses to run an office, like stuff like that. So typically that's a place where you can cut from because a lot of it is not need. But I don't know where else they could cut from there.
So it's like when you have your grocery budget and instead of feeding your kids like steak, you go to ramen. And so you've saved money on your G&A.
Yes. Yes, correct.
My kids would actually prefer me to feed them ramen instead. All right.
a loss of $5.8 million, compared to a loss of $6.2 million in the prior year, and a loss of $4.8 million in the prior quarter. Our Q3 adjusted EBITDA includes a connected fitness inventory reserve charge of $3.4 million. Moving to the balance sheet and cash flow. Our cash balance was $38.2 million compared to $58.7 million in the prior quarter. The decrease in the cash balance was largely driven by debt repayment of $15.3 million. Excluding the debt repayment, our cash balance declined by $5.2 million in Q3.
Okay, so why would they choose to pay an additional $15 million on their debt?
The main thing I think they were trying to do, again, this is all theory and my guess. Number one, I think that they were trying to pump the stock price to say, hey, because they announced it, I think it was 2 or 3 weeks before Q2 earnings call. So I think they were trying to bump the stock price up by saying, hey, we're in such a good spot right now that we're going to pay some of our debt down early. So I think that was part of it. The other part from a business perspective is the less debt you have outstanding, obviously the less interest you're going to be paying on it every month. So it did reduce their overall interest expense, which is a big cost saving. And then 3, I think it could have been so what they don't mention on this call at all is that part of that $15 million repayment was also changing the terms of the loan. So it was a $50 million loan. And I think it was July, they paid back the $15 million, or it was early August. Whenever it was, they paid back $15 million early, ahead of schedule. But then on top of that, they adjusted with the loan, there's a revenue minimum that they have to hit quarterly. And there's a liquidity minimum, which essentially means how much cash they have.
Okay.
So the revenue minimum was adjusted to $100 million through, I think, March 2024. So for Q4 coming up and Q1 of 2024, they have to hit at least $100 million of revenue. After that, the minimum goes up to $120 million in revenue starting Q2 2024. The liquidity floor for cash on hand the next 2 quarters is $20 million. And then Q2 of next year, it goes up to $25 million. What's interesting is right now, I want to say they have $38 million cash on hand. $27 million of that is for the loan. And the loan amount actually went up from 25 million last quarter to 27 million. I think that's probably accrued interest. So essentially they have $10 million that isn't loan. And then for revenue, they have to hit 100 million minimum the next 2 quarters. For Q4 of this year, they're projecting revenue of 105 to 115. That's down from their projection this quarter was 120 to 130. So that's a drop of 15 million of the range. And they've been dropping their guidance typically 5 to 20 million each quarter. So even if you dropped it only 5 million for Q1 of 2024, you would be saying 100 to 110 million. That's really risky. So if they don't hit 100 million this quarter or Q1 of next year, they're breaking the terms of their loan agreement, at which point, I don't know the technicals of it, but like technically they wouldn't be in default, but they would be in a bad spot.
Maybe they may have like some penalties.
Yeah, they would probably pay fees, and or the lender could probably also demand the loan like be paid back and essentially terminate the agreement. So not good.
No, that's super risky.
So yeah, so I think that I think what maybe happened is that I don't think BODi approached the lender. I think the lender approached BODi and said, hey, your business, it's not going according to the plan we discussed when we made this loan. We are willing to like lower our expectations, but in exchange, you have to give us a good gesture and pay back part of the loan now so that they can deleverage some of their risk. So I personally think that's what's happened. And of course, BODi spun it to seem like it was a proactive, positive step.
Mhm.
So, yeah.
Interesting. Okay, that's fascinating.
versus $7.7 million in Q2 and $13.7 million in Q1. Our cash used in operations in the third quarter was $200,000 versus $3.7 million in the prior year and $6.5 million cash used in the prior quarter. Our net inventory was $31.7 million at the end of the quarter, down from $43.4 million at the end of the prior quarter, which represents a 27% reduction, primarily driven by our bike inventory. We have successfully reduced our net inventory level for 8 consecutive quarters, and we continue to aggressively look.
Because you're fire sale.
Fire.
That is not a good thing. You're
No.
losing so much money. Okay. I mean, I guess they have to try, like, I will give them this. They are good at spinning.
Oh, so good. It's like they could have a master class on it.
Mhm, mhm. I bet Brendan would pay them to do a master class.
Oh, yeah, for sure.
Look at our demand and supply requirements. We do not plan on allocating additional capital to bike purchases. Our CapEx for
Okay, so once the bikes are gone, they're gone. They're not going to do any more bikes.
That would be my expectation, because by the time the bikes are gone on the fire sale, they're not going to have any cash to buy more inventory of bikes. So
Interesting. How long will it be until they quit producing bike content?
great question. Do they have a plan? Probably not,
Yeah, probably
but
not.
we will see.
You know, I will say, I think they have increased the bike. I think they increased it to like 20 new rides a month or something.
Yes, they did up it.
So they
'Cause
did up it.
It was low.
That's what people want. Yeah, people have been asking for more bike classes and more bike content, and they just haven't been providing it.
Yeah.
Again, I think it's a too little too late, Carl.
Yes. Yep.
Yeah, interesting.
PP&E was $0.5 million this quarter, a significant reduction from the $4 million in the third quarter of last year and $1.6 million in the second quarter of this year. Our CapEx for content was $2.9 million this quarter, an improvement from $4.2 million in the prior quarter. It was $3.1 million in the second quarter of this year. So total CapEx in Q3 was $3.4 million, and that should be our approximate run rate in the coming quarter. The CapEx improvements have been driven by streamlining our content production and our technology staff. We continue to manage our cash use and are reducing cash needs despite the decline in revenues as we focus on positioning the company to generate positive cash flow. In fact, when you look at our year-to-date cash use in operations and investment activities, it was $24 million. That is down from $60 million last year and $248 million in 2021.
Whew.
Wait, what was down that much?
Cash use. So if you remember in 2021, when they went public, I think they had $400 to $500 million of cash on the balance sheet. And that year alone, which they were only public for, I think, half the year. I think they went public in June. In that year total, they used $248 million of cash, which was like, what is that, 60 to 70% of the total cash? And it was all wasted. It was all lost. It was all crappy marketing. It was building up bike inventory. And yeah, so now they're at what, 24 million cash used. So
Holy
yeah, it's pretty astonishing.
yikes.
Yeah.
I was like, surely they got that wrong. No.
No, it's
No.
accurate.
Whoa.
Yeah.
Yeah, they're driving their bikes toward bankruptcy.
Yes.
They're all riding the bikes to them.
We will continue down this path of dramatically improving our use of cash as we reposition the company to generate free cash flows. Turning to our outlook for the fourth quarter. As a reminder, our guidance is based on where we stand in our transformation journey. As you know, Q4 is seasonally the slowest quarter for the fitness industry and for our company. As a result, we expect fourth quarter revenues to be in the range of $105 million to $150 million. We expect a net loss in the range of $25 million to $30 million and adjusted EBITDA loss in the range of $1 million to $6 million. Now,
That's a pretty big range.
Which
1
one?
million to 6 million for adjusted EBITDA.
They've been giving a range of about $5 million. And they've been hitting at the more positive end of the range. Again, I think because they're setting low expectations.
Okay.
The range isn't that large. But it's like last quarter, they were, I think, between 5 and 10 of a loss. And pretty much all of that could have been accounted for the summit cost. If you remember, our trusty friend, Linda, who was not on the call yesterday, had asked about that. Like, okay, if you're not going to have the $7 million charge in Q3, shouldn't EBITDA be positive? And the answer very easily should have been yes. So to see them still at a $5.8 million adjusted EBITDA loss is very disappointing. That is the number that, from an investor standpoint, everybody was paying attention to this year, because at the end of 2022 and at the start of this year, they had promised for several months, publicly and privately, that they were going to be EBITDA positive, that they would be at 0 or above consecutively by the end of the year. So that would have meant Q3 and Q4, they would have been positive. And then basically on the Q2 call in August, when it might have been Linda, somebody asked about it, and Mark Sudan was basically like, oh yeah, like, haha, like that's just like, we're not doing that anymore. And so, yeah, there's been no meaningful improvement for me this year it's been in that range. So very negative from a stock performance perspective to see that number still at that point.
Yeah. Best Channel just said, I thought Beachbody died years ago. It's just because they haven't had P90X or Insanity.
Yep.
They haven't had the same level of programs. So I think, like, in the fitness industry, they really have become kind of insignificant, in my opinion.
Yes, they're outdated, and they are, what would be the word? Like, they're not important. They're not at the leading edge. They're not out front doing cool things that people want to be a part of.
Well, it's interesting. So, and I don't know, maybe because you work in the fitness industry as well. So when they had the Beachbody Live programs, they were kind of continuing their name a bit more, I think, within the fitness world, and they got rid of all of that.
Mm-hmm.
Because, I mean, the gym that I was teaching at, P90X was huge. And so to be a P90X certified or whatever, to be able to use their names, we actually drew in a lot of people that way.
Mm-hmm.
And they kind of shot themselves in the foot, in my opinion, with getting rid of Beachbody Live.
Yes. Yep.
Yikes.
Yep.
And they, in my opinion, that was another way that they really kind of shot themselves in the foot with a lot of the coaches, because a lot of the coaches came over with the Beachbody Live from Shalene Johnson's Powder Blue, and they liked the live portion and they incorporated the coaching into it.
Yes.
So it's been interesting to see that decline, I guess.
Mm-hmm.
Interesting.
I will turn the call back over to the operator to open it up for questions.
Thank you.
If you would like to ask a question, please press star followed by 1 on your.
If he could have done the whole call, I probably would have thought it was much better. I loved listening to his accent. Like they should have had him deliver the result.
Oh God.
Your telephone keypad. If for any reason you would like to remove that question, please press star followed by 2. Again, to ask a question, please press star followed by 1. As a reminder, if you are using a speakerphone, please remember to pick up your handset before asking your question, and please do ensure that you are unmuted locally. We will pause here briefly as questions are registered.
All right.
First
so
warning sign for me was that.
right. And I was like, Linda, come
Oh,
on.
I was waiting for Linda. Where are you? Sister, we need you.
Our
This
first
was-
question today comes.
Kate, that was such a long pause.
It was. That's where I was like, what's going on? They don't normally pause like this.
No, it
Normally
was
the questions are lined up and ready.
yeah. Same thing. I was like, why is there so much dead? Oof.
From the line of Darren Tuttle from Singular Research. Please go ahead. Your line is now open.
Wait, pause it. So this guy, he's been on every call, and you're going to hear how he starts his question. And he has said this every call that I've heard him on. So I don't know if he's a plant or what's going on, but he starts his question off with this every time.
Well, and as soon as he started, I was like, did he listen to a different call?
Yeah.
I don't understand.
Dystopian.
Yeah, thanks, guys. Great quarter here.
Yeah, man.
My
For
question
sure.
comes up from the debt payment here. So that one, this latest debt payment. So that was a use of cash. Is that sort of a one-off plan, or is there going to be extended plans in the following quarters to have an accelerated debt repayment schedule? Thank you.
Hi, Darren. This is Mark. That was a one-off in Q3. We paid down $15.3 million of the debt. We continue now on the regular schedule of the debt, and the total debt carries out through February 2026.
Okay. And was that just part of cleaning up some of the balance sheet and opening up some cash flow for following quarters, or was that more of just like a strategic allocation where you thought paying down the debt was the best incremental return for the dollar?
Yeah, listen, we spoke with our lender, and if you look in early August, we filed information relating to modification covenant on. So that was all part of that negotiation with them.
There you go.
The liquidity and revenue covenants on the debt, and given our outlook, we're managing with the capital we got on hand, and our plan allows us to execute against that. But for now, there's no other plans to further pay down the debt.
Okay, thank you for that.
Thank you. There are no additional questions.
Oh, no.
What?
I was so sad. That's when I decided to sell. I was like, oh, no. If Linda's not here, this is bad.
One question with that?
Yeah, that was really bad.
The thing I was thinking, people have just given up at this point, and so there's why even hit your head against the wall?
Yeah, what's interesting, so Singular Research, where Darren Tuttle is from, so they cover the stock. Linda was I think she was from D.A. Davidson, and then there was one other analyst on the call last quarter who asked, I think she asked a couple questions. I forget which firm she was from, but essentially these analysts cover the stock or the industry for their firm. So D.A. Davidson and Singular Research, where Darren's from, they're the only two investment firms that cover the stock and issue price targets. So the fact that Linda was not there, to me either means she didn't care to be there, and that D.A. Davidson did not want to be a part of the call, or they've stopped covering the stock. It's bad that there's not a lot of coverage, because, if you take Disney, for example, there's dozens of investment banks that cover it and offer research and opinions and price targets. So the fact that Beachbody only has 2 firms that do that is a bad sign, because it means there's not interest in the stock, essentially. So the fact that there was 1 question and only 1 analyst was a very negative perception for me.
Okay. Can they pre-screen questions?
I don't know. Typically, again, you could probably Google it, but in most scenarios, who's going to ask questions is already lined up, and usually it goes to analysts that cover the stock. So again, if you listen to a Disney reports earnings today, actually, but if you listen to their call, it's very likely that quarter over quarter, it's going to be the same analyst who's covering the stock for Bank of America, for example. They're going to be allowed to ask their questions each quarter. Whether or not the questions are screened by the companies, I don't know how that works, and I'm sure it's different company by company in terms of what their expectations are and what the norms are around that.
It seemed in some of the other calls that they have not pre-screened, because some of them Carl kind of has to recover. There was one call, I don't remember if it was second quarter or the first quarter results. They asked how many coaches there were, and they asked some questions about the MLM side, and they just were like, so we don't have to talk about that. We don't disclose that information.
Yeah.
So it's really interesting. That one didn't seem to me like they knew in advance.
No, and I don't think that the norm is to pre-screen. I don't think that is the norm or expectation in the industry, but I'm sure that it does happen at some different firms. But for Beachbody, I've gotten the vibe that the questions themselves are not screened, but that the analysts are lined up to ask questions. Because if I pressed *1 on my phone yesterday, I don't think anything would have happened. It's not like they come and talk to me and are like, "Oh yeah, why don't you go ask your question?"
Yeah,
I don't think that's how it works.
Yeah, Joe Schmo, go ahead.
I can't even comment on Carl's Instagrams. They're not going to let me on the investor call.
Okay, did he block you completely?
No, he's never blocked. Let me tell you, I'm not I don't want to be a cyberbully. I'm not for harassing people. But I have sent that man so many DMs, and I have spammed his posts with comments. And my comments only recently started to be hidden / removed. I'm not blocked. I can still comment on anything. But the last couple of posts he had, now he's top of my feed because the algorithm figured out that I like to engage with Carl. So now when he posts, I see it within a minute. So the last couple of posts he posted, I was the first or second comment on it, and he engages with a lot of comments. So I know that's the one thing I get satisfaction from. I know if he hasn't at least seen my DMs, he's seen my comments on his posts because he hides them. So he's read them. But yeah, Carl, my friend, keep that line open for me because I have a lot of stuff to process over the coming years.
I know when I saw that, I was like, yeah, Kara, it's on Instagram. Most of them just block us when we have comments for people. So the fact that he's not blocking you is kind of funny.
Yeah, and I'm in investor forums, and a lot of people are blocked. So I don't know what it is about me, but thus far I'm not blocked. So
well, I'm holding out hope for you.
Yes.
All right, let's finish this.
It's Carl Daikeler for any closing remarks.
Okay, thanks for joining us today, everybody. As we continue to execute on our turnaround plan, I want to leave you with the 4 key takeaways from the call today. First, we're widening the sales aperture to expand our sales channels and driving more profitable revenues through performance marketing, our launch of the BODi Previews free tier, and Amazon. Second, we acknowledge that it's a difficult environment for most direct selling models, but we're increasing momentum throughout our network and with our partnership with Brendan Bouchard and the introduction of the Growth Day personal development app this week. And we're aligning performance incentives with partner productivity and our overall financial goals. Third, we believe we're well positioned in an environment where there's increased focus on weight loss with our unique approach to structured fitness, nutrition, and personal development tools, all at a great value to the consumer. And fourth, we're moving fast and continue to be focused on generating profitable revenues, driving free cash flow, and building cash. I want to thank all our stakeholders for believing in this vision and for supporting the Beachbody company through this process. Our work is extremely important, and I look forward to demonstrating significant progress in our next call. I'll add that investors and analysts can reach out directly to Mark Swedan, our CFO, with any requests for meetings with management or with Mark Goldston, and we'll keep you posted on our activities going forward. Thanks again, everybody. Appreciate you.
Okay, so I think I'm gonna invest, and then I can request a meeting.
Okay, well, like this is it's like okay, I don't know like who gets to have these meetings, but yeah, we would love to have one, Mark. I have emailed with the general the corporate secretary of BODi a couple of times, and he did respond. He stopped responding eventually. I did ask him for Carl's email address, to which he said that he would not give that out. But they also did not provide Mark's email address, so we need that. Yeah, so let's. Can we have a meeting, please? We are asking for it on the record.
Maybe I'll go ahead and invest like $1.
I would not risk that. Although you could get 5 shares, so
It's true. It's true. Oh my gosh. This is where Carl and his delusion at the end. Do you think he really believes this? Do you think he thinks? So this is personally speculation. Do you think that he really thinks they're going to turn around?
I think Carl is going through a similar process that I've gone through as my ship sank. You know, I was invested for 3 years. Q3 of 2021 is when I invested. So no, that's 2 years. So it's literally like to the date of when I first bought. But over that time, as I've lost more and more, you know, you have the sunk cost fallacy, and then you also have the stress and pressure of the losses mounting and the whole deepening that you have to climb out of. He's experiencing that. And I think he's at a similar point where I got this year of going, I'm like, we could potentially be screwed. Yeah, he's going through the grief process. He really is. And I think you can see it, especially over the last year, with how kind of chaotic and erratic he is in terms of bouncing from one pitch to health esteem, superfood dessert. Now he's the last couple of weeks, it was that healthy holiday structure challenge. Yeah. And then on this call, he's talking about structure suddenly, like that's their thing. And then it's bouncing from Petra to Autumn to Brendan to Mark. Like it's erratic. And to me, that shows he's trying to patch like the mental loss as it gets heavier and heavier. Yeah. So I don't know if he believes it or not. I think he's trying to make himself believe it. I think that's where he's at.
Yeah. I mean, yeah, I completely right. Like it's like again, I think for Lloyd, it's like this sunk cost, right? Like, okay, if I just keep holding on, surely it's going to go up to $1.50 or,
Yeah.
whatever. Okay. So someone had asked earlier, and I did keep it in mind, asking what is going to happen to the top coaches. Again, this is guessing. My guess, their compensation is going to continue to go down. And I do think a lot of them will ride it out. Now, what's going to be interesting, so you've got some of these busy, or the top coaches who haven't done anything in a really long time. And they haven't had to, because they've probably maintained. So let me give you an example. Monica Gray. Monica Gray was one of the first ones that came in. She was besties with Shalene. She was in a lot of Shalene's videos. And she has not put out anything about Beachbody for years. But she's also really highly ranked. Why? Because her direct coaches would be like Janelle Summers, who is going to maintain rank, Christine Dwyer, who's going to maintain rank. So she's probably still like a 10-star diamond and hasn't had to post anything for a really long time. So I think what you're going to start seeing is, as it crumbles here, it's just going to be a domino effect until eventually these people at the top aren't going to be able to hold on. Now you're starting to see some of the like more well-known coaches already jumping because they're like, well, I'm going to do it soon.
Mhm.
So I know Christina had mentioned earlier, she has seen a large group go to Q Sciences. So you're seeing like Q Sciences. I've seen some go to Modere. One of the top coaches just went to Hugh and Grace, which I'm not even that familiar with them. They're not one of the big ones. But yes. So what's going to happen is they have to ride this out. Because again, they retired their husbands. And here's what happened with me. It wasn't Beachbody related, but I quit to start staying home with my kids. Okay. So then now that I don't, it's not that that almost came out really bad. Now that I don't want to stay home with my kids, now that my kids are older and I want to get back into the workforce, I have this huge gap in my resume. And that is what is going to happen to these husbands that have retired. They're not going to be marketable to get back in. And so they are looking like down the barrel at going like, oh my gosh, what is going to happen? So they're trying to hold on as long as possible. I do think some of them have seen, so like Bonnie Engel, her husband just opened up a gym. So I think we're starting to see some of them who maybe didn't diversify as well are now starting to be like, oh crap, it's coming. And they're starting to do some different things because it's not going to be sustainable long term. But I think I think a lot of them will ride it out. Hopefully, hopefully for them, they have diversified. I know like Lindsay Matway has she has quite a few different businesses. She has like a lash, like magnetic. I don't know if hers are magnetic or not, but like a fake lash company. She owns several rentals and like Airbnbs in Florida. She was really smart, in my opinion. She bought this huge mansion in Destin. So when they hold their like retreats, the other Beachbody coaches are renting from her. So like, so she was really smart. You've seen this with a few of them who have been smart about diversifying, but there are some of them who definitely have not. And, that's where there's this mixture of feeling bad for them, but also not, because they are victims too, but they've also been predators. And so it's this weird, a weird thing going on. Let's see, what was this question? Yeah, I mean, honestly, when when I was in, once you hit a certain rank, now I think it's a diamond and above, they assign you customers. So if you just go on and sign up for Beachbody, you are assigned to a coach. And that coach is supposed to reach out to you. And it's supposed to be this benefit to the coach that, like, oh, we're giving you free customers. People would be so mad when I would reach out to them. They're like, I don't know who you are. I don't want a coach. This is stupid. Like, leave me alone. Okay. Because they didn't want one. And now I think that you do have the option when you sign up to not have a coach. So you can do it without a coach. But the things that they're doing, so for example, this the reactivation. I'm thinking about this too, like from a gym perspective. So Aaron, if you had some personal trainers and I said, okay, so now rather than paying you $180, they're going to pay you $40. But because you trained them before, they're going to be assigned to you. You're not going to get any commission. So you're not going to make anything from them. You just need to be their coach.
Yeah.
That's what they're doing.
Yeah. And they're going to go elsewhere.
I mean, there's so many aspects of it that I don't understand. It's like business 101.
Yeah. It's also a bubble that is popped.
Absolutely.
So this model of operating a business is designed like that. And eventually the bubble does pop. And that's what you're seeing right now. Yeah, they've been around for 25 years, but that means nothing.
Yeah.
The bubble could have popped year 3. The bubble could pop this year. It popped 100 years from now. But it's inevitable that with a structure like that, when you set it up like dominoes, eventually it's going to fall. And whether or not when it falls, you can save what's left and restart. That's where really how the business on the back end and from the financial perspective, that's where that matters.
Yeah. Because do you think we were wondering if at one point they were going to get rid of the MLM structure and go to just affiliates. Do you think that could even be a possibility?
I mean, anything's possible. The fact that they went public and didn't move away from this model at all, to me, says that they wouldn't. And again, Carl, who definitely leads the ship and makes the strategic decisions, he is very clearly comfortable sticking to what's comfortable and what's familiar. So I don't see him making some radical structural change. I just don't see it happening from just a psychological standpoint, let alone a business standpoint.
Yeah. Good for you. Yeah. I mean, here's the thing. And I don't want it to seem like we're horrible and we're like hoping for the downfall of a company. Like, because that seems it feels gross, right? To be like, yay, everyone is going to go down with this ship. But I think for me, it's watching the manipulation from Carl at the top. It's got to stop. Here's the thing, though. This is the part that is frustrating to me. Autumn, the top coaches, they're going to be fine.
Yep, everyone at the top.
Fine. Everyone at the top will be fine because she has a huge following. She will create a YouTube channel and sell memberships and she will be fine. But it's these mid-level coaches who are making 80 to 100,000 a year, possibly. They're the ones who are going to be destroyed. It's not these top people.
Mm-mm.
And that's where it's hard. And that's where I think our frustration comes in, is seeing the people that they're hurting actively. And it's a lot. It's a lot of people.
Yeah.
So, I think with all of them, like, yeah, it's these mid-level coaches that I feel bad for.
Yeah.
Because I think they've gotten roped in just like everyone else and have bought into Carl's delusions. So, yeah, interesting. Well, Aaron, I have taken 2 hours of your workday.
Oh no, this was the timing of finding your channel and your audience and Jen and DC, like, the timing of it, it was fate for me because I mean, literally $120,000 that I saved up for 10 years. I texted my family yesterday. Like I was like, I'm out. It's worth $1,000 now. So like, that's what I have. But I was like, it's basically, I like listed all my jobs for the last 10 years and was like, it's like I never worked here. I never got cash in a Christmas card. I never saved money when I got a bonus at work. It's like none of those things happened. And to finally cut the cord, it's like cutting the cord for a lot of people that are in Beachbody. It's quite a roller coaster of emotions. And so finding you and your channel just in the last couple of weeks, I feel really was it was meant to be because it helped me a lot, not only to get an internal perspective, but to get confirmation of what I needed to do. I've been holding on. Somebody mentioned lowering their cost average to $1 or $1.50. I've been holding on at a lower cost average for a while, hoping one day something would happen or the turnaround would happen or the stock would get pumped. And it just hasn't happened. And while it still could happen and people that are invested could get their money back, the mental toll that it's taken on me the last 2 years, looking back on it, it's like looking back on somebody that got out and goes, holy crap, like what kind of mind games was I playing myself? How much time a day was I looking at Beachbody research and looking at the stock chart and looking at the price versus somebody in Beachbody? How many hours a day was I exercising? How much calorie restriction was I doing? Like there's so many similarities that only in the last couple of weeks I've seen. And so while I'm out $120,000, which is crazy, number one, life will move on, and I have a good support network. And number two, it's good news for me because I can finally, close this chapter, say screw you, Carl, and move on with my life. I feel greater today than I felt in the last 2 years.
I bet.
Even with a realized loss. So yeah.
Yeah. Well, my community appreciates you so much. I'll miss you on stock twits.
Oh my God.
Oh my gosh. Your posts on there. Oh man.
Yeah. I love stock twits. I'm not going to leave stock twits forever. I will still lurk in the background of the Beachbody forum. However, I will not be posting. And I loved, oh my God, people would be like, don't you have anything better to do? Like, how do you post so much? I'm like, it's like takes 5 seconds to write a tweet on there. Like, it's not hard. People probably think I'm like some like gremlin, like living in a cave. I'm like, no, like I'm a normal 30-year-old. I have a full-time job.
Yeah.
But I also like had a lot of money invested. So that's why I'm on there a lot.
Oh my gosh, they were amazing. Your posts were awesome. Well, for everyone who joined us, thank you. Like the live chat has been amazing. Someone had mentioned if you can go on and like, comment, subscribe, all the things that will all help the algorithm and hopefully get this out to more people like Aaron that are just wondering, am I the only one, getting some validation and thinking that like, okay, because I thought this for a long time. I'm like, maybe I'm just crazy. Maybe I was just dumb. Maybe I just made these mistakes, which I did. I did a lot of that, but you're not alone. There are a lot of people who have been taken in by this, whether it's from the investment side, from the coach side. A lot of people put a lot of things in, a lot of their like heart and soul and hard-earned cash. So, all right. Well, Erin, you're the best. And thank you for all of my live chat. And we will talk to you guys on the next call. So bye, guys.
Okay. Bye, everyone.